Larry Fink, today, the guy running BlackRock, is really the president of the United States. If we look at the kind of influence he's got in every industry, Joe.
BlackRock, State Street, and Vanguard control $22 trillion in assets, which is roughly the equivalent of the entire gross domestic product of the United States of America.
Conspiracy theorists, both on the right and on the left, and especially in the center, has been telling us that three companies, BlackRock, Vanguard, and State Street, control everything.
I'm not a conspiracy theorist, but
even someone as smart as Charlie Munger warned us about the influence of these companies.
I think the world of Larry Fink, but I'm not sure I want him to be my emperor.
There are different levels of the BlackRock Vanguard conspiracy. Number one is that they own and control everything. That Larry Fink is the most powerful person in the world. And he's the one giving orders to presidents, to kings, to emperors, to everyone. Usually the people who believe in the level 1 conspiracy, they smoke a little too much. And then we have the level 2 conspiracy. Here you will usually find the TikTok finance influencers, that's a sheep, who will tell you that BlackRock and Vanguard Group, they own everything, they control everything, but their powers are limited. But still, they own the market. On level 3, that's where you find Bernie Sanders and Patrick Bet-David. They will tell you that BlackRock and Vanguard, they own everything, yes, but not really. It's not really about the ownership, it's about the control. And then on the 4th level, you have people like Charlie Munger, Michael Burry, Jamie Dimon, who will recognize that the way that BlackRock, Vanguard operate, it's not really fair, it's not really the best system. They have a lot of influence, they have a lot of power, and they are not really evil as such. Let's explore all these 4 different levels, except maybe level 1. On level 2, they are right to be worried about BlackRock, Vanguard, and State Street. Since if you look at the top holders of most companies, you will see the same name, Vanguard, BlackRock, State Street. They are the top shareholders of companies such as Apple, Google, Microsoft, all these companies, defense contractors, almost all companies on the S&P 500, they are the top shareholders. And even if you look at smaller companies, you will see that they are the top shareholders. There's a good reason for this. Since they operate some of the largest exchange-traded funds, ETFs in the world, some of the largest mutual funds in the world, they need to buy shares of these companies and therefore they become major shareholders. For example, let's look at the SPY ETF, which is run by State Street. The SPY ETF follows the S&P 500. The ETF today has $534 billion in assets under management. This is the amount of money that investors put in that ETF. So if let's say today Apple is 7% of the S&P 500, it means that State Street will need to buy $37 billion worth of Apple shares for the SPY ETF. That's how State Street owns 3.8% of the total Apple shares, which is worth over $100 billion. Vanguard Group is actually the top shareholder of Apple with 8.6% ownership, followed by BlackRock at 6.7% ownership. And then we have Berkshire Hathaway. So if we say that Warren Buffett is the largest shareholder of Apple, technically it's not true. Why I'm saying technically? Because this conspiracy has been debunked several times. These companies, they do not really own everything. Even though their name is written there, if you're investing in the SPY ETF, you own that part of Apple. You as the client, you are the real owner of those shares. It's just like saving your money in the bank. The bank doesn't own your money. Even though they are controlling the asset, it is counted as asset under management for the bank, but really, you own that money. It's the same thing if you're buying stocks through a broker. The broker doesn't own the stocks, you do. Because just think about it, if really BlackRock control $10 trillion in assets, really they own $10 trillion, that would make Larry Fink the greatest investor of all time. Because it took Warren Buffett 8 decades to go from 0 to $1 trillion in assets, and now Larry Fink did that in just 4 decades. It's not that easy that you just go on the streets and people are going to give you their money. Nobody is giving their money to BlackRock. They are just offering a service to invest that money. The asset under management is not even on their balance sheet. If you look at the balance sheet of a bank, you put your money there, And that's mostly because of accounting. You will see that it's on the assets, but on the balance sheet of BlackRock, the assets and the management is separate from the assets of the company. And BlackRock itself, it makes money from fees. You can find all the details. It is a public company. In fact, you can buy the shares of BlackRock. You will become an owner of BlackRock and you will control the world. An interesting thing to note here is that if you look at the top shareholders of BlackRock, you will see that BlackRock is its own shareholder. Usually this is not allowed. A company is not allowed to own itself. But here, why is this allowed? It's because the ownership is done indirectly. Mostly passively, but also sometimes actively. When it comes to active funds, I don't think there should be any issue. It is like giving your money to a hedge fund. So there is the hedge fund manager, you're giving your money to that person and you expect that that person is going to invest that money the way they want. You expect that the person is going to vote the way they want. In a way, you're delegating those tasks to them. You don't want to waste your time to make research and other things. You're delegating that task. It's the same thing that I do on eToro as a popular investor, as an elite popular investor. My portfolio right now is worth around $53,800, but I'm managing over $1 million for over 1,000 people. So these people, when they are copying my investments, they expect that I'm going to make good investments for them and make them great returns. If you're wondering why my portfolio was higher last week, it's sometimes you have bad weeks. What matters is to measure success in terms of decades. This is not sponsored in any way, but you can always follow or copy my investments on eToro. Coming back to BlackRock, it is like you're electing a government. You're delegating some of your responsibilities to them. But the government is not going to come to you every time there is a decision to make. So let's say there is a road to pave in a certain city, in a certain village. The government is not going to come to you and make a referendum whether to pave that road or not, and then another referendum, how much should that cost or not. It's a waste of time. For passive funds, we have an issue. Let's say you're buying the SPY ETF. You're not really delegating anything to the fund managers. The jobs of the fund managers are very limited. They don't need to go and look for investments. They don't need to do any research or anything. They just follow the S&P 500. But what happens to the votes? That's the problem. BlackRock, Vanguard, and State Street cannot really go and ask the owners of this ETF to vote. There are 500 companies, and these people, they want to be passive investors. That's why they invested in the S&P 500. They don't want to go and do research to know all these companies. What happens is that BlackRock, State Street, Vanguard, they are going to vote the way they choose.
Maybe we can make Larry Fink and the people at Vanguard Pope. All of a sudden, we've had this enormous transfer of voting power to these passive index funds. That is going to change the world. And I don't know what the consequences are going to be, but I predict it will not be good.
It becomes an issue when they have a specific agenda and they vote towards this agenda. And it happens lately that they had the ESG, environment, social governance agenda, that they had to promote a certain thing. For example, on the board of directors, the color of your skin mattered. I don't know why. So this can be detrimental to shareholders. And they have a fiduciary duty to make as much money as possible for their shareholders, for their clients. In December 2020, a small fund invested $40 million in ExxonMobil. $40 million is only 0.02% of the company. So they did not really have such a big ownership of the company. 0.02% will not give you that much influence. But the company was not very happy on how ExxonMobil was being run. They were not happy on certain climate issues. ExxonMobil is an oil company, but we are living in an ESG era. Now even the oil company, they have to be eco-friendly. I don't know how they will do it, but they should do it and also make money for shareholders. So this small fund, engine number 1, they wrote a letter to the board of directors of ExxonMobil. And they were demanding some things. Among the things were the election of 4 new directors that they were choosing. Of course, everyone knew that that was some kind of a joke. If let's say they had 5% ownership of the company, then maybe they could try to elect 1 director. And we are talking about ExxonMobil, the largest oil company in the United States. We are not talking about some random micro cap here. Trying to elect 4 directors out of 12 is a lot for such a small fund. But they managed to get the support of BlackRock, Vanguard Group, and State Street. And since these companies already own over 10% of ExxonMobil, they voted in favor of the new directors, and ExxonMobil had 3 new directors who are now eco-friendly. These are the types of situations that we want to avoid. But we should ask ourselves, why did it happen? Why did it happen to ExxonMobil? This is not something that can happen to a company like Berkshire Hathaway, where Warren Buffett has over 30% of the voting rights. He has skin in the game. It is not going to happen, never. No one, even someone who owns 20% of the company, can come and try to remove him or try to remove some director that he approves. But in the case of ExxonMobil, the board was not really shareholder friendly. And if you look at the stock price or even the performance of the company, you will see that it has not been so well for the past years or even decades. Actually, when engine number 1 put their directors, the stock price of ExxonMobil did much better. But here you can say that we also had higher oil prices. So there was really an issue. The shareholders were not happy with the board. So when engine number 1 came, nobody came in support of those elected directors. There was no one to support them. It doesn't have to be Berkshire Hathaway where Warren Buffett had 30% of the voting rights. Even if, let's say, the insiders of a company own 10% of the company. Even 10% is a lot. And if those directors are really doing a great job, shareholders are going to support them. Shareholders are going to vote for them. When we think of the movie Wall Street, we think of that speech, greed is good. But there is something that you should listen to a little before those words.
Today, management has no stake in the company. Altogether, these men sitting up here own less than 3% of the company. And where does Mr. Cromwell put his $1 million salary? Not in Teldar stock, he owns less than 1%. You own the company. That's right. You, the stockholder, and you are all being royally screwed over by these bureaucrats with their steak lunches, their hunting and fishing trips, their corporate jets and golden parachutes.
This is an outrage. You're out of line, Gecko.
Teldar Paper, Mr. Cromwell, Teldar Paper has 33 different vice presidents, each earning over $200,000 a year. Now, I have spent the last 2 months analyzing what all these guys do, and I still can't figure it out.
This is the type of companies that is easy to influence by passive investors with active powers. Besides these passive funds, they own less than 20% of those companies usually. You can always counter their votes with the 80% ownership. But it is sometimes hard to find 80% of the votes because people usually vote more during elections than the companies they own. So my advice to you is go and vote. You own one share of a company, you are an owner, it is your duty to go and vote. That's the main thing that we can do to change the way things are today. These companies today have understood that there are some issues, people are not happy about them. Maybe that there could be more regulations on them. Maybe some politicians might try to break them down, so they tried to remedy the situation and introduce voting for some of their funds. I am in no way saying that everything is good, that everyone is wrong about BlackRock. No, but it's not as bad as people think. But it's true that BlackRock really does have tremendous power. But we give them that power. Every time you buy a BlackRock ETF, you're giving them that power. So who's really responsible here? It's us. We want to invest easily. We don't want to do the research. We want to invest passively. So we just delegate the power to those corporations. So we are really responsible here. These companies are called shadow banks because they have some of the same activities as a normal bank, but without the regulations. But we chose that. We don't want to pay high fees with the normal banks, so we go to the shadow banks. But there is a reason why the banks are charging us more, because of the regulations. So we are really choosing to give them that power. Or maybe Larry Fink is really the emperor of the world and this video was sponsored by BlackRock for me to tell you positive things about them. I'm going a little too much off script here. I don't want to get any trouble.